My name is Myron Nahra. I'm a volunteer with the Junior Achievement of Greater Hampton Roads. I'm here to talk to you about paychecks and tax returns. So congratulations, you've got your first real job and you're going to make $20,000 a year. So how are you going to get paid? How much money are you going to get in your paycheck when you get first paid? That's a great question. Most companies pay twice a month. So your gross salary for that first paycheck will be $833.33. On top of that, they take out taxes. You're going to look at your first paycheck and say, well, I'm supposed to get $833.33. Why am I only getting $694.56? There's Social Security tax. That's 7.65% of your gross income. That helps you pay into the Social Security system, so when you get old enough to retire and start collecting Social Security, there'll be money in the fund. On top of that, we have a federal tax. A certain amount of your gross pay will be withheld on your behalf and sent to the Internal Revenue Service. Virginia has the same thing. A certain percent of that tax will be withheld, sent on to Virginia on your behalf, and that's how you get to your net check. So in our scenario, you had $833.33 was your gross payment. Your FICA taxes were $63.75. $50 was withheld for federal, $25 was withheld for state taxes, and your net check to take home was $694.58. So when it comes to your paycheck, there are two different kind of pays you want to be concerned with. One is your gross pay, how much am I making? And your net pay, how much am I actually taking home into the bank with me? So in a $20,000 a year scenario, you'll be paid twice a month. Your gross pay will be $833.33. That's the amount of pay that all your FICA, Virginia, and state taxes will be withheld on. So you might be wondering, how am I actually going to get my paycheck? Well, that's a great question. The two most common ways are you actually get a paper check. More commonly these days, everybody's getting what's called direct deposit, where the money is automatically deposited into your checking account. Now, some people get tips where they work. Most of those are waiters and waitresses and bartenders. Now, tips you have to be careful because you still have the same type, gross tax, gross pay, less your taxes. But you got to remember, your tips are taxable to you. And most of the time, your employer will record the amount of tips as a taxable income to you, but they don't always take out the proper federal and state taxes. You want to make sure that they take out as much federal and state tax as necessary, so when you file your tax return at the end of the year, you don't owe any money. Now, some of you might have your own business where you don't get a paycheck, but you get a check as an independent contractor or a subcontractor. You are taxed in a little bit different way. So what you have to remember to do is put money aside so when you file your tax return at the end of the year, you'll have money there. So remember, in our scenario today, you are making $20,000 a year. So your gross pay period for each paycheck is going to be $833.33. Your total amount of Social Security, FICA, federal, and state taxes will be subtracted from that $833.33 to give you a net check of $694.58. Now, that net check will be paid to you in one of two ways. You either get an actual paper check, or your money will be direct deposited into your account. And if you're self-employed and don't have taxes taken out, you want to make sure that you put money aside for your taxes, so when you file your tax return, you'll have the money to pay your taxes. Right now, I want to talk to you about filing your first tax return. Now that you have a job and you're making $20,000 a year as your gross income, you're going to have to pay taxes on that. So what I want to do today is kind of explain to you how that's going to work, because you might have some questions being the first time you file a tax return. Tax returns account for any money that you have made during the previous year. In our scenario, you're going to have a $20,000 a year salary and you made $5 interest in your checking account. So that's going to give you a total income for the year of $20,005, which also will equal what's called your adjustable gross income. From that amount, we're going to assume that you haven't bought a house like that, you're renting, or you're still with your family. You're going to give a standard deduction that automatically applies to everybody in the amount of $13,850. That's going to leave a taxable income of $6,155. So your taxes on $6,155 is $616. Now, from your paycheck, we're going to assume that you had withheld $1,200. So that means you take the $1,200 withholdings, subtract the tax of $616, and you're going to get a refund of $584. But what if you didn't have enough money withheld? Say you only had $500 withheld and you owed tax of $616. Then you would have to write the check in the amount of $116 to Uncle Sam. So you might be wondering, who decides and how are the taxes withheld from my paycheck? You actually do that. You make that decision. When you first start working as an employee, there's a myriad of different forms that they're going to have you fill out. One of those forms is called a W-4. And on that form, you're going to fill out how much federal taxes you want withheld from every paycheck. There's also a form called a VA-4 in Virginia, which does the same thing. It says how much tax you want withheld for Virginia purposes from each paycheck. Whatever amount you determine that you want withheld will be incorporated when they determine your paycheck and your net pay. That amount of money that you ask to be withheld will then be paid to the IRS and Virginia, respectively, on your behalf. So when you go to file your tax return, that money will already be there in your account. You might be asking yourself, how do I file my taxes? Do I mail them? Can I do it electronically? The answer is you can do either one. Today is very simple to file a tax return. You can download the forms or go to the post office and get the forms and prepare them, put everything on the appropriate lines, compute whether you get a refund or owe the taxes, and you can mail them off to the respective taxing authorities. Or what 99% of the public do these days is you can do it electronically. Very simple. You go online, you enter the data, the software does all the work for you, does all the computation, so you don't have to worry about that part, and it will let you know you're getting a refund or you owe money. And if you're getting a refund, it will even deposit the money into your checking account for you, which is the quickest way to get your refund. Because if you file by paper and it asks them to mail you a refund check, it could take 3 or 4 times longer to get that refund check. I want to go over a couple scenarios with you, and depending on what kind of business you have, what kind of expenses you may be able to deduct. In the first scenario, you've been doing shorts on YouTube, and you made $2,000. What can you offset? Basically, any expenses that you incur to help you generate that revenue, you can deduct. In this scenario, obviously you're going to need the internet. You're going to need your computer, your laptop, any other computer or photographic equipment that helps you make those videos, you can deduct as well. And then you're going to have to register to pay licenses in your city where you work. So business licenses, any office supplies, anything again that you use to help you make that money. Now in the second scenario, you're a construction worker, where you hire yourself out and people hire you to help them do a job. So you made $10,000 as a framer. What expenses can you deduct? Mileage is one I always like to tell people about because they forget about it. As an independent contractor, the IRS every year comes out with a mileage rate that you can deduct the amount of miles you drive for that business in that year. That's a huge deduction that people always forget about. Another big one are going to be your tools, because that's how you make your money. So any tools that you use in the business, whether it be big or small, you can deduct that. In the construction business, safety equipment, steel-toed shoes, safety goggles, work gloves to help protect your hands, anything like that. Those are deductions. You can always deduct your cell phone because that's how they get a hold of you, and usually your internet because that's how they email with you. Again, any other expenses that you use in making that money, you can deduct. Some of you might have a little business going on the side where people pay you through PayPal, Venmo, Cash App, or any of these other apps where people can send you money. Well, here's something to keep in mind for 2024. If you make over $600, if somebody pays you over $600 for goods or services that you've provided, that Cash App, Zelle, Venmo, or whatnot is required by law to send you what's called a 1099 10K that says you were paid this amount of money. So the IRS knows when you file your tax return, they're going to expect to see that money shown up somewhere on your taxes. If not, the IRS is going to say, hey, we have records saying you made some money. Why did you not report it? So remember, everything you make in 2024, if somebody's paid you over $600, the IRS will know, and you have to report that on your taxes. So you're ready to sit down and prepare your taxes. What information do you need to have in front of you? Some of it is very simple. Your name, your address, your social security number, and your birth date. Then you should have received from your employer a copy of your W-2, which says how much your gross earnings were for that year. And then any other forms of that you might have earned, any interest income or investment income, will send you a similar form. You take all that information, you input it when asked where in the software, or if you do your taxes by hand, and you'll have everything you need to do your tax return. But remember, if you want to have your refund automatically deposited, you will need your routing and checking account numbers for your bank account. Now, if you're self-employed, you're going to get a different form. Most of the time, it's going to be called a 1099 NEC. And that's the information that's letting the IRS know that you got this amount of money from this vendor. And then you'll have to show that information when you file your taxes on your Form Schedule C. On top of that, you want any of your expenses that you use to help you generate that $10,000 in our scenario. So any expenses, utilities, phone, internet, anything you use to do that business would then be subtracted from your gross income to give you your net income, and that's where your tax liability will be based off of. So you're ready to prepare tax returns. What information do I need, and what should I have readily available? Well, before preparing your tax returns, you would have already told your employer how much taxes they've had withheld for federal and state purposes from your gross pay. So that part is taken care of for you. But that's how that amount was determined. You're going to get a form, if you're an employee, called a W-2. So you use that form and any other forms that you might receive that say how much income you received, like an investment account or a checking interest account. You're going to file the Form 1040. You'll need your name, address, social security number, and your birthday. You use the information from the forms provided to you, and you can either file your tax forms by paper, where you do all the calculations and the input, or you can do it electronically, where you just input the information and the software does the tax work for you. Either way you do it, you'll come up whether you get money back or if you owe money to Uncle Sam or the state taxing authority. If you're getting money back, you can have that money direct deposited into your checking account. And remember, the quickest way to have that money into your account is to file electronically. And if you owe money, you can also have money deducted from that said account. Now, if you're an independent contractor, you're going to need a couple different pieces of tax forms. You're going to file a Schedule C, self-employed income, and you're going to receive a 1099 NEC from the people who paid you money. That's going to show you how much of your gross income. Now, you should report all your income, not just the money that you got with 1099s reported on, but all your income. And I'll set that against any expenses incurred to you in your business. Telephone, internet, if you're using your car, mileage, if you use tools, any expenses that helps you generate that money. Your tax preparation fees, you want to pay somebody like me to do your taxes. All that's deductible. And remember, you got to file all that by April 15th to make sure that you're not late and don't incur any late filing penalties. When you first get hired and you're filling out all that paperwork, some of that's going to be about the tax forms that help detail how much taxes you want out federal and state-wise from your paycheck. But you also might be given the option of having other deductions withheld from your paycheck, such as health insurance or a retirement plan. Now, sometimes you have to work there 6 months before you're eligible, but I want you to be aware of them. A lot of times with a full-time job, one of the benefits they offer you is a health insurance plan. Some companies will pay all of the premium for you, but the majority, you will pay a small portion of it. That amount will be deducted from your paycheck. Another option is retirement, something I highly encourage people to do, especially 401k plans. 401k plans are monies that you pay into, and your companies will match up to a certain percent that goes towards your retirement. And the beauty of it is, it's called tax deferred. Now, what does tax deferred mean? That means, say on a given paycheck, you put $100 into your retirement plan, that $100 reduces your taxable income or your gross pay for that period by that $100. And that's what you've determined your federal and state taxes on. You'll still have to pay Social Security taxes on that $100, but still, any money you can put away early on in your job career will just continue to grow and grow, and then when you retire, you can have fun with retired life. As an employee, there are other benefits that companies offer to you to help entice you to take the job. Some of those benefits are sick pay, vacation pay, and personal time. Now, all this varies from company to company, but I want to tell you what each of these is. Sick leave is times that you're actually sick and don't feel well enough to go to work. So companies will automatically every year either give you X amount of hours at your disposal, or some businesses, as you work, you accumulate sick leave hours. But either way, you have it available to you if you need it. So you don't work the 80 hours in the two-week pay period. You're still paid for the 80 hours. It's just a combination of the hours you worked and sick leave. Now, vacation time works the same way. Either you're given 2 weeks or 3 weeks, depending on what each company decides and lets you know when they hire you, available to you where you go, you make requests. You can't just decide, oh, I'm using a vacation day. You make the request for that time off, and it's paid time off. Or you accumulate a certain amount of hours or days based on the amount of time you work. Again, each company is different, but either way, that's another option to you. To know that you'll have a vacation, you're still making money while you're out spending that money. That's always a nice thing. And some companies offer personal days. Examples of personal days are you're off on your birthday. For major holidays, Thanksgiving, Christmas, you get a day or two off around the holiday to give you an extended time off. And those days are paid days off, and a lot of times they are flexible. But again, each company is different. So you want to ask those questions when you're going through the hiring process to make sure you understand what is available for you in the terms of extra benefits. Another way that employers will help keep their employees happy are with bonuses. We all like bonuses. A bonus is basically an extra amount of pay that is included in your paycheck. It could be a performance bonus. It could be just a Christmas bonus. It could be a birthday bonus. Every company is different. And then you want to ask that question, what type of bonus structure do they have when you're going through the hiring process? But if you're given a bonus, it's included in your gross pay. And remember, that means it's subject to the taxes, FICA, federal, and state to be deducted from. And you can also opt to have your retirement have a deduction as well to help put more money into your retirement plan. Now, in summary, different employers offer different types of benefits, but you want to be aware of the type of benefits that are out there for you. So when you go through the interview process or the hiring process, you know what questions to ask and to see what you can take advantage of. Such expenses might be health insurance. Do they pay some or all of your health insurance premiums for you? That's a big one. What type of retirement plan do you have? There's no 401k money that you can put money in. Do they match? If they do match, how much is their match? What is your sick leave policy, your vacation policy, and your personal day policy like? So you know how many days a year you can expect to be able to have paid vacations. Or if you're sick, you still get paid when you can't go to work. And it's always nice to know, are there bonuses available? If they are, how are those earned so you can try to strive and earn those bonuses? I'm going to give you a scenario where you got a $20,000 a year job. Congratulations. So how much is your first paycheck going to be? We talked about the difference between gross pay and net pay. So the gross pay on a $20,000 a year job, you'll get paid every 2 weeks, will be $833.33. Then we talked about the different deductions that will come out of that gross pay. Your FICA taxes that is paid into retirement system for when you retire at 65, and your company also matches that amount. Federal taxes that pays towards taxes when you file your tax return. your state taxes. So when you file your state tax return, there's money already there paid on the liability you will owe. Sometimes you'll have an additional deduction of a health insurance premium paid and a retirement account. All those taxes and deductions will get you to your net pay. In our scenario, we're going to say you just started working. So you haven't qualified yet for the insurance or the retirement, but you will in 6 months or so. So by the time you take your gross pay, the $833.33, and subtract the payroll taxes from it, you're going to have a net pay of $694.58 that will be paid to you either by check or by direct deposit. So that's how you're going to get paid. What happens once you're paid? You're going to have to file a tax return. So you'll file your tax return by April 15th for the year that just ended. So you'll file your 2023 tax return by April 15th of 2024. So how do you do that? What do you need? And how do I do that? You can file your taxes either by paper or electronically. The majority of people file them electronically because it has a few advantages that I'll get to in a moment. But here's the information you'll need. Your name, your address, social security number, and your birthday. If you're an employee, you will receive a Form W-2 that says how much income you were paid by your employer. If you're an independent contractor, you'll get a 1099 NEC that says here's how much money we paid you where you work for your own business. As an employee, you file your taxes by the prompts. It'll tell you based on this income, this is the tax owed. You take your withholding that was withheld from your paycheck. If you withheld more than your tax, you're getting a refund. Congratulations. If you didn't have enough withheld, I'm sorry, you owe Uncle Sam some money. And then you'll do the same for the state. And if you have a refund, that can be deposited electronically for you, which is 2 to 3 times faster than if you want them to mail you a check. If you're an independent contractor, you take your gross income and you subtract any expenses that you use in the course of your business. Mileage, internet, cell phone, supplies, equipment, things of that nature. All that helps you get to your net income for the business. Follow the prompts and that'll tell you the same how much taxes you owe. Now, if you're smart, you'll take 20% of the money you make as gross earnings and put away into a separate account to have ready for your taxes. Or you make quarterly payments throughout the year to have money for your taxes. So when you find out how much tax you owe, the money's either already paid or you'll get a small refund or pay a little bit back. Thank you for your time today. I hope the information I discussed with you is helpful to you. Again, my name is Myron Nahra. I'm a volunteer with Junior Achievement of Greater Hampton Roads. Good luck.